All right, good morning, everybody. This is Michael coming to you from GammaEdge. We're going to do our pre-market strategy session for Friday, May 19th. May OPEX is today. We'll start with the SPX PBI charts that Paul has posted. We'll go through those. Here is the PM settled complex. All expiries turned on as indicated by the black tiles here. Quickly, we note the transition that has been outlined here, 4165 to 4180. Currently, we're trading up around this 4,200, which has been that large liquidity level overhead that we've been watching, plus GEX. We do see out of the money call speculators still very well present, 4,250 and all the way up to 4,300. We see the JPM expiry calls, short calls outlined here at 4,320. We see this area below us at 4140, 4150. So my anticipation in play today would be anything below 4,200 if we do get a gap up at the open and see some profit taking. Would look for demand down into the top of this transition area. This is where I'd be looking to get involved long in the market. Below this transition area, I would take a little bit more risk off cautionary stance for a move down to this 4150 area. We see 10 billion net delta sitting there, a significant amount of total OI there, 100,000 contracts. And you can see those reflected here with a split 50-50 pretty much. So that would be my game plan for today. Above 4,200, we have this double node strikes here at 42.20 and 42.25 on the quarters there. I would anticipate some stalling action into that area, possible digestion above that. Then obviously we'd be targeting the 42.50 level. Not really anticipating that we get there today with OPEX, but that's the levels that I'll be looking at and playing and kind of my game plan. And obviously if we got below 4150, then that would be a much more risk off stance in my view, and I would change how I'd be looking at the market. Obviously watching tick also. Zero DTE, large area here that we'd be watching. 4180 was the top of the transition on that PM settle for all expiries. Double strikes here, 4170 to 4175. That would be a demand area I'd be watching to move back to the upside. And then double strikes overhead here, pretty decent amount of liquidity, 42.20 to 42.25. So for me, I'm going to be kind of bracketed today, looking for getting long the market versus 41.70, 41.75. If we do see some morning weakness, we do have Jay Powell speaking at 11 a.m. Could be a market moving a little bit volatile event, so make sure you're watching your risk into that time frame. And then I'd be looking for pausing, stalling action into this 42.20, 42.25 overhead. Not necessarily getting short unless we got some significant looking pullbacks starting, but that would just be where I'd be looking to possibly take profit if we did have morning weakness, get long, and then manage your risk and profit taking into that overhead level there. So that would be my game plan so far. Again, plus one DT, this would be for Monday. 4,200, obviously significant level overhead. We do see out of the money call speculators, as I said, still targeting levels above that 4,200. Once we get above there, we would start grabbing those out of the money calls. Those would turn in the money. So propensity to monetize for a Monday expiry would probably be highly likely. So that would be, some stalling action. Calls monetized, dealers have to sell and maybe draw us back down into that 4,200 or slightly below. 4180 was that transition area on the PM settled that we discussed. So that would be a first demand line of defense that I would look, and then the top of this transition area here for Monday would be 4160 all the way down to 4130. So be looking to get long in this demand area for move back up to 4,200 if we do get the morning weakness. Obviously, if we do see some deterioration throughout the day and we start slipping down to these lower areas, then I would kind of change my stance on that. Next week's expiry, obviously the crystal ball to see how next week would look after OPEX. We continue to see call speculators be dominated, positive gamma here all the way up to 4250. Kind of trails off pretty quickly above that 4250, so that would be the cap for me unless we start seeing 4300 targeted to the upside for next week, so kind of the weekly crystal ball. And again, the same transition on the downside, 4135 to 4170. Looking for demand into that area, downside area to get long the market and have some trades back up here. Obviously, as I've said below here, we get a character change below 4135. Then obviously we have 4100, which is just that large demand area that we've been holding for the past kind of weeks to months. So we'll look for these areas to continually hold, and the out of the money and in the money call speculators are still very well present. If we do start to see erosion, then we can change our stance a little bit, but that would be where I'd be bracketing trades, at least for me, into next week. Here is the combo complex. All expiries turned on. Again, positive gamma. Expected move is down 0.68%. So a little bit more low volatility anticipated there for all these expiries turned on. Again, 4,200, 42 billion net delta sitting there, 333,000 contracts. So that is the large ceiling overhead that we're watching, continue to watch. 4225, I talked about that on the plus or zero DTE. That was being targeted. Again, 17 billion sitting there, almost 100,000 contracts there. So that would be your next kind of overhead ceiling. Then 4250, 4300, again, out of the money call speculators still widely present, being targeted. And then we see the JPM short calls there at 4320. Downside, we see these in the money calls really just dominating the whole complex. Massive amount sitting there at 4150 with the combo complex. I think this is extremely important as we go through past May OPEX, or sorry, past this OPEX, which is May, and into the end of the month. 4150 obviously could be a definite area that we watch for demand, and then 4100 obviously same level, 66 billion sitting there, almost 500,000 contracts there. So we continue to have demand levels, supportive type action below us in this market. Now, obviously, if this starts to erode and these start to go away, then that would open the door for maybe some more significant pullback. But as of now, we really have these support levels below us, and they continue to be holding the market continually at 4100, which we've tested actually this week, and then 4150. So those where I'd be watching to get long the market if you're not long the market, and if the CT and tick continue to say that we're going to be moving up. SPY, positive gamma, kind of the same levels. We're at 420 pre-market. 425, 430 is still being targeted overhead, and actually we're starting to see some 440s and 450s come in on SPY, which is pretty amazing. I mean, these are out of the monies, obviously longer duration calls speculating up here, but people are targeting this up here, and this seems like this continues to grow above us. And then 410 to the downside, that would be the first, 415 obviously would be the first line of defense, and then 410, and then obviously all the way down to 400. Plus one DT, I'm watching this 421, 422 overhead. Pre-market, we are tapping that 420, so that would be my ceiling that I would be watching for some stalling action. And then above that would be 425. 417 would be my first area on a pullback. I'd be looking at 415, 417, and then 410. Past this OPEX, all expiries turned on, 420 all the way up to 422. We do see 425 being targeted, 430, as I said, and even 440 and 450. So continue to watch this. If you see erosion of this in SPY, the out of the money call speculators start to go away, in the money put speculators, or in the money puts come in, then we could see a little bit more weakness. Again, 410 on the downside would kind of be my line in the sand. Might change my stance a little bit, but we still have the supportive action even all the way down to 400, as I was talking about it with the SPX also. Next week, crystal ball 421, 422. As you can see, confluence between all the PBI charts. Pretty important levels there overhead. I would look for some stalling action into there. If not, targeting 425, and then 415 to 417 on the downside, and then 410. Kind of the same thing after next week goes away. We can continue to see the complex be out of the money and in the money call dominated, 420, 425, 430, kind of the same areas. We do see this kind of drop off a little bit, 415, but then down to 410 after next week's expiry. I want to draw your attention to IWM. It's been showing relative strength. For me, this is a risk on, risk off kind of proxy for the market. 180 overhead continues to be a level that I'm watching, at least on a TA and gamma level basis. We need to see these calls, speculators start stepping in. We still see these in the money puts above us. Once these start to erode away, then I think that opens the door for us to move up further on IWM. But as of now, we still have these in the money put speculators sitting here at 180, 185, and 190. To the downside, We have these out of the money put speculators are still continuing to target this 170 that continues to be the kind of demand support action. I would love to see some of this start to erode away and we actually see some calls start to come in, which this red would change to green. I am long ETFs on IWM versus 170. I would probably even give it maybe around a 165, but if we start losing this 165, then I think we'll probably see some further weakness in the market overall.
FYI, we popped above the 50 MA yesterday finally. We've been kind of struggling at it.
Great.
On IWM.
Yeah, that's an important psychological technical level. But that 180 overhead really continues to be the ceiling for IWM. But I would love to see these puts start to go away, this start to change a little bit more to green, and we really start to see IWM start to kick in. That would give us a little more speculative action. Obviously, those are financials, regional banks, energy, and there's some small biotechs in there that would obviously be a little bit more speculative, and you would see the speculative nature of the market change a little bit more than just seeing some of the large cap names carry us, and I think that would kind of give us an overall lift in the SPX and SPY. So continue to watch this. It is improving. This was continually red, dominated with the puts, but we are seeing some change. So I'd like to see that continue to transition and happen as we move into the summer months. So you can flip through these IWMs, kind of the same area. Like I said, we do see some out of the money calls speculating, but 180 really is that cap even into next week. And then after OPEX, this week OPEX, we really don't see much change in these puts and calls here. We really need to see this start to erode away and really start targeting like we were seeing in that SPY come in significantly above us. So again, GammaEdge summary for today. We'll go through this really quickly. 0DT folks, make sure you look at the PDF. Pretty much as I discussed, targeting these levels overhead, 20 to 25, 75 to 70 on the downside, 41.80. We are seeing the CT tick continually move more towards a bullish stance. The overall duration of the long-term market model on the ARCX is still red above cyan. So this is a positive look, and we are starting to see the CT emerge above this colored ribbon. What we want to see now is the CT continue higher up this direction, and you'll start to see the slope of this colored ribbon change and start to trajectory upwards on the ARCX. And then we need to see the tick US. We need to see the CT get above this colored ribbon and start to see the compression red towards cyan, and then we'd love to see a flip in the tick US also. What was interesting yesterday is, and I pointed this out in the morning, how I'll be looking at today is we started with new highs outpacing new lows for the start of the day. So that is different than the previous 5 days when we had the market start to move up. So this gave us a little bit more confluence or a little bit more directionality, at least on my side, that the new highs were outpacing new lows, and then we could have a significant move up in price. We didn't really see the filtered cumulative tick start kicking in until the afternoon. We actually saw this kind of trending down a little bit as price was moving up a little bit. So this was definitely a divergence, but we continually play price and understand what is happening with the CT and price. And then after we got the CT start to move above these moving averages, then really the filtered tick started to kick in, and we had that nice reversal there around 2 o'clock. And move back to the upside. So I'll be watching this today at the open and see how CT and filtered tick start out the day to see if we're going to move into that 4,200 and possibly have some stalling action, or is there a chance that we really start to break out above 420, 4,200 on SPX and really start targeting that 4,250 overhead. COTMC is 4270, so we have 4250 overhead, and then COTMC is 4270 if we do get some significant move. My play at the open, I will give you my thesis, would be profit taking at the open, some morning weakness, pull down into some of these levels, maybe down to 4180, 4175, possibly start to reverse back up to the upside if we're going to get a drift into the end of the day. That would be how I play. Obviously we have JPAL at 11. So important to remember that volatile event, but that would be what I'm looking for. Now, if we start getting below this 4175 to 4180, then I'd look for more weakness down to 41.50 area, and then I'd look for demand to start to come in down there for me to get long the market back to the upside. So pretty much I'm looking to get long the market, at least intraday, anything at this moment, because the demand has been so high. Now, if we start getting some major dealer adjustments and sell bars coming in, then we can change our stance some. But any pullback, I would be looking to get long the market as demand continues, as we've seen on those PBI charts. Really nothing's changed, and we definitely have the supportive action below us in the PM settled and in the combo complex here. We do continue to have that demand area below us and supportive action. So, all right, that's all I have for today. If anybody has any thoughts or comments, want to make anything, let me know. I'm looking at the open there, and that 4,200 I think will be the dominant level that we'll all be watching today. So.
Hey Michael, on that 52-week high-low chart, can you remind me what that yellow line is? Is that ETFs or something like that?
This yellow line here, that's the divergence.
Yeah.
Sorry, that's the divergence between the new highs and new lows. It's just telling you what that number is.
All right, cool,
Yeah.
thanks.
Yeah.
Hey Michael, does it mean anything to you? I know we want to focus on price more than like volume, but does it, like, there were big high volume sell bars yesterday, and obviously price, moved up anyway, but it seemed like a lot of the big volume was selling. I mean, until the very close there, obviously, where there were huge buy bars. But I mean, does any of that mean anything?
Yes and no. It depends on what your trading style is and how you're looking at it, right? We have had low. So here's the MO of how I look at it. Now this is just opinionated, but we have low volume melt ups all the time, right? All the time. It is just the way it works. And then people say, well, we're going up on less volume, but there's multiple faceted thoughts about why that is. But if you look back to, I think Paul pointed this out, we discussed this all last Christmas. We just had this low volume melt up. It just continues to melt up. There's really no volume. Everybody says there's no volume, and price just continues to go up. So I used to be a huge volume trader. I mean, let's say 8 to 10 years ago, and I really watched it. And I'm like, okay, well, that's a sell bar. It's large volume, but I don't really subscribe to that as much anymore. Now, you will see volume come in. I get it on some of these sell bars. But as you saw yesterday, I mean, really, if you were saying, oh my gosh, we're going up, I don't want to be involved, there's no volume, then you missed really like most of the move intraday, right?
Right, yeah, well, clearly, yeah.
Exactly, right. So I don't subscribe to that as much as what I used to. I will say when I was the IBD background and we had to see that, whatever that volume threshold was, that you had to be above for it to be, an accumulation day, yada, yada, yada. I don't subscribe to that as much anymore. Now, I won't throw the tinfoil hat out, but I do think there's a lot of stuff going under the radar that you're not really seeing in volume anymore. Obviously, we know 0DT is massive. I think yesterday it was 52% from 2 to 4 p.m., and we see what happened from 2 to 4 p.m., right? I mean, right here is 2 p.m., right? And we see what happened all the way to 4 p.m. Now, is this strictly 0DTE action yesterday? No, I'm not subscribing to that. But once the train starts moving, people are playing directionality. We know this. It's been proven. There's been multiple papers on it. And once that ball starts rolling, and the mechanical opening of contracts just swamps any second or third order Greeks, and you've got charm flows coming in, and we've had this two-pronged dealio happen. I say dealio, this two-pronged thing happen almost 3 days in a row, right? All the way back here, Wednesday, here, boom, dealer adjustment, here, what was this? This was the morning, you know what I'm saying? And then this is the afternoon here. So to answer your question, long story short, that was a long run, but no, I don't subscribe to the volume thing as much as what I used to. Daily, yes. Intraday, not as much. You know what I'm saying? Because I think there's just so much stuff going on that, I don't want to say theory-wise, that's not being reported, that's probably not being captured instantaneously, that's probably skewing a lot of this volume. And just not really giving you a realized view. I think Jim's talked about this. I think a lot of the higher options guys that I look on Twitter have talked about this a lot too. Now, whether it's all theory, it's whether it's causality, nobody really knows. But obviously, there's a reason that the volume is low, but you still see price continue to rise, right? So I think there's multifaceted things going on, and I just don't look at it as much as what I used to. So, and I think
Jen and a few other people also point out that like whatever the volume is per day, either in the U.S. market or international markets, a small amount of volume is what moves it. The incremental, 5 or 10 billion in the whole market versus the whole market. That little bit of extra demand. And in a low volume setup, then that's even more so. And then, like you said, add the influence of SPX, 0DTE, and all that. And going back to the, to the IBD market of 10, 20 years ago, the hedge fund or mutual fund or whatever pension fund accumulation doesn't move the market as much as it used to, and it's much more flow under the hood. Are we looking for a trade a year from now or for a week from now?
Yeah.
Make sense?
Yeah, I totally agree with it. So a few guys had started tracking just actual per share dollar volume, which I think was interesting because that really showed really what was happening with the transactions and not necessarily just share volume. Like if I buy one share, it's just this, but they're actually tracking the dollar volume, which was pretty interesting because it was significantly higher than what just the individual share volume was. So that was actually showing a lot more divergence in price moving up or price moving down and what was happening. But yeah, I agree. And we know how these mutual funds and institutions do these trades now, right? A lot of them don't even hit the feeds, right? We can go conspiracy. I don't want to go down that road, but obviously we know there's dark pools. We know there's all kinds of other stuff that is happening, right? And that just it gets reported, but it doesn't get reported instantaneously intraday. So you're not seeing that like instant volume, right? On a 5-minute bar, 10-minute bar, 65.
Yeah, they have like
bar.
24 hours to report, right?
Yeah, right.
Yeah, I track dark pools, so.
Yeah,
dark pools 24. They have up to 24 hours for certain types of transactions. So yeah, you're absolutely right. So it's always after the fact, and dark pool it's influential, but you're right, as a percentage of retail versus what's happening behind the scenes, the off retail transaction, dark pool swamps. It absolutely swamps retail. So yeah, it's really hard. I agree with everything you just said, Mike.
Yeah. So it used to be my deal. With IBD and back in the day, if an institution came in and bought a stock, in millions of shares, you would see it, right? You would see this happening. Nowadays, you don't see it like you used to. Now, I will say that if it's a low float stock, I don't even know. I haven't even traded a low float stock in 15 or 20 years, so I don't know what a low float stock would be. But if you're in a low float stock, then obviously yes. If you see somebody coming in buying a couple 100,000 shares, you're going to see that happen. But on Nvidia and Tesla and Amazon, there's 20 million shares being traded there, 100 million shares. I don't even know what Netflix traded yesterday. It was an insane amount. And these can just be going back and forth, right? Transaction-wise, buying and selling. So it really is kind of masking what is actually really happening. So. Yeah, Netflix was 20.925 million shares yesterday. And obviously, if you're watching the daily, obviously that is just a massive volume bar, right? And we're up on a massive volume bar. So could that have been an accumulation day yesterday? Most likely, right? There were some people coming and buying, but were the transactions, were they all, on the bid? Were they all on the ask? I mean, what was happening? It was just a high volume day, right? And there were just a lot of transactions going back and forth, or was people actually accumulating it to hold it for a long-term position? That's where the whole thing comes in, where I'm kind of like, okay, well, nowadays I don't really know. I mean, was this just transactions of people buying and selling intraday, or was somebody actually accumulating to hold this for the next 6 months to a year? So, and interestingly, we went right up to plus gex and pretty much a important supply level on TA there. So, all right. Hopefully that does everybody. Hopefully everybody's good. We'll go ahead and shut down the morning strategy session for the morning. We'll see you in the Discord in just a minute. Thanks, everybody.